This is Nightly Business Report with Tyler Matheson and Susie Garrett.
Market milestone. The S&P 500 crosses 2,000 for the first time ever, a key level for investor psychology. Which sectors got us here and which will drive the next leg? Whopper of a deal, all-American Burger King is in talks to merge with Canada's Tim Hortons and, if approved, send its corporate headquarters north of the border. And new heights. An original Superman comic book sold for a record price on eBay, but the real winner might be eBay itself. We have all that and more tonight on Nightly Business Report for Monday, August 25th. Good evening, everyone. I'm Susie Garrett. Tyler's off tonight. Topping our news, uncharted territory. That's where the S&P 500 index went today, crossing 2,000 for the first time ever in intraday trading and marking the latest milestone in the stock market's historic bull run. Corporate takeovers, which we'll have more on in just a moment, and hints of more stimulus from the European Central Bank helped stocks hit that psychologically important number. Now, adding to the enthusiasm, a report from the Chicago Federal Reserve, which shows economic activity expanding at a rate above its historical trend. By the closing bell, the Dow rose 75 points, the Nasdaq added almost 19, and the S&P 500 was up 9.5 points, closing at 1997.92. Dominic Chu has more on the 16-year journey for the S&P 500 to cross that 2,000 mark.
February 2nd, 1998. Remember what it was like back then? The average price of gasoline was $1.06 a gallon. Today, it's $3.47. The S&P 500 Large Cap Stock Index crossed 1,000 for the first time. Today, it crossed the 2,000 mark. The mid to late 1990s were all about tech companies, but today, it's more balanced.
It's interesting if you look back into the 1990s when it was kind of a dot-com era, if you will. A lot of high-tech companies, a lot of high multiple companies. I think the market is probably more spread out amongst other sectors, and I don't see that true leadership in any one particular sector right now.
Since the S&P 1000 mark, the best performing sector has been energy. That's stocks like ExxonMobil and Chevron. As a group, they've nearly quadrupled in value. As for the worst performing sector, it's telecom stocks like AT&T and Verizon. As a group, they've lost 1/5 of their value. Telecom is also the only sector that has lost value since February of 1998. Now, when it comes to individual stocks, take a look at beverage makers like Keurig Green Mountain or Monster Beverage. Back then, they were worth just pennies per share, and today they're among the largest companies in America. Meanwhile, bank stocks like Citigroup and insurance stocks like AIG have been the worst performers. Over the next few months, some experts believe that the market can continue higher if you pick the right places to invest.
I think that it's really going to be consumer discretionary and information technology that's really going to propel this market higher towards the end of the year. More offensive sectors rather than the defensive sectors in something like utilities or telecom.
Of course, there's still a large concern that a stock market at record highs is ripe for a pullback. Still, though, S&P 2000 is a nice way to benchmark for many investors, a big moment in the stock market. For Nightly Business Report, I'm Dominic Chu.
With us now, we're happy to have Mohamed El-Erian. He's Chief Economic Advisor at Allianz. So nice to see you, Mohamed.
Thank you, Susie.
So we have to start with the S&P at 2,000. It's a nice round number. It's a milestone, and a lot of investors are talking about it. And the one question that kept coming up today is this the top? Should we start preparing ourselves for a correction? Is that the next thing that we're going to be worrying about? What are your thoughts on that?
So it's a big moment, and we need to understand why we're here. It's interesting because we had a new record high for the S&P. We had the Nasdaq at a 14-year high, despite geopolitics getting more complicated in Ukraine and in the Middle East, and despite weak data out of Europe. And the reason why we're here, you said it in the beginning, central banks are very supportive. The ECB has signaled that it intends to be even more accommodating, and there's a ton of cash coming in from the balance sheet of corporations through M&A activities that is giving the market an extra lift. So as long as these two elements continue, the market is in a good place. The problem is that they cannot continue forever. We need the real economy to pick up. We need earnings growth to get a boost from the top line.
Well, you wrote an op-ed piece this week, and one of the conclusions was that you said that this summer we've seen that the markets have been extremely resilient in the face of these geopolitical shocking headlines. Do you think that investors and the markets will continue to brush off these headlines, these nasty headlines, going into this last quarter of the year? And back to that correction question, might we see a correction?
So they will brush them off as long as the geopolitics does not tip Europe into recession. And this can happen because Europe and Russia are in a game now of sanctions and counter-sanctions, and they weaken both economies. So as long as that doesn't get to a tipping point, then the markets will brush it off. If it gets to a tipping point and Russia and Europe goes into recession, companies sell a lot to Europe and they will feel it. So that's something to keep an eye on, and it's critical because it really is a tipping point dynamic.
So historically, we all know Wall Street history has shown that September is a tricky month. We have a lot of market meltdowns in the month of September. What do you think will be the key issues for stocks and bonds once it's back to business next week?
So geopolitics remaining just noisy and not impacting growth. That's the first thing. Second, central banks remain accommodating. And then thirdly, money continuing to come in. So a big question is, will S&P 2000 pull in more money into the market? Will it encourage more companies to use the cash that they have on their balance sheet to do M&A activity? And remember, some of these M&A activity end up in people paying a lot more for the companies simply because they're doing it for other reasons. They're doing it for tax reasons, or they're doing it for defensive reasons. So they end up overpaying. So these are the issues to look at, Susie.
And we have two big things on the calendar that everybody will be looking at. Next week on Friday, an important employment report, and everybody's going to be watching that given the conversations that the Federal Reserve has been talking about of looking at new data. And then there is an important Federal Reserve meeting in mid-September. At the end of the day, what do you think is going to, those data points are going to tell us? And should investors and business owners be fearful of higher interest rates, or should they actually welcome it?
So first, on the data point, what the market is looking for is solid job growth and, critically, wages that are not increasing too quickly, because that is what would push the Fed into being more aggressive in terms of lifting its foot off the accelerator. So the employment report, look at the wage number. That's a critical number. In terms of the Fed will signal that it's looking that things are a little bit confusing, that is data dependent, but I don't think it will tell us much in September. In terms of interest rates, the hope is interest rates will go up for the right reason, and the right reason is that our economy is getting close to liftoff. That is what the stock market needs. We need a handoff from policy-induced growth to genuine growth.
All right. Well, you've given us a lot to think about going into September. Thank you so much. We really always love having you on the program.
Thank you, Susie.
Mohamed El-Erian at Allianz. Well, two iconic brands, two countries, one merged tax strategy. Burger King is in talks to buy Tim Hortons. This is the Canadian coffee and donut chain. If the deal goes through, the combined company would be headquartered in Canada, another one of those so-called tax inversions, which could lower Burger King's tax bill. Both companies trade in the U.S. and both surged on the news of the possible deal. Burger King shares rose 19.5%. Tim Hortons jumped about 19%. But Sarah Eisen reports that there may be more to this proposed merger than just lower taxes.
It doesn't get more all-American than the Whopper. Or maybe not. Burger King may soon become Canadian. The company confirming it's in talks to buy Tim Hortons, a Canadian coffee and donut chain. If the deal goes through, Burger King would move its headquarters from Miami to Ontario, adding fuel to the inversion debate in Washington, where companies, mostly in the healthcare sector, have been pursuing mergers and acquisitions outside the U.S. to take advantage of lower corporate taxes overseas. Canada has a 15% corporate tax rate, much higher than the 35% rate in the U.S.
If you look at the effective tax rate from last year, they were both roughly 27%. Over time, the statutory rate for Burger King should move toward 35%, and then the statutory rate in Ontario is 26.5%. So it's more of a long-term tax saving. In the near term, it wouldn't matter that much, but longer term, yes, they should.
Beyond the tax advantages, analysts say there are other reasons for Burger King to do this deal, like international expansion. Tim Hortons has nearly 80% of its business in Canada. Burger King's wide global reach, with outlets in Africa, Asia, and the Middle East, could help fuel growth. Analysts also point to Tim Hortons' attractive product lineup: coffee and donuts. Breakfast is a growth area for fast food. We've seen Taco Bell, for instance, launch the breakfast waffle tacos to go after a piece of McDonald's breakfast business. Tim Hortons could help Burger King compete. Coffee is also a high-margin, attractive business, and Tim Hortons is a cult favorite.
Top-line growth at Tim Hortons U.S. grew more than 15%, driven by a mix of strong new unit growth as well as strong same-restaurant sales growth. That's the kind of growth you really don't see in the quick service category. I think having that would be a key advantage for Burger King.
No question, relocating because of tax advantages is a big part of this story, especially with Walgreens opting out of an inversion to relocate to Europe because of political pressure. Walgreens staying in the United States. Treasury Secretary Jack Lew has called these deals unpatriotic. President Obama has called the companies corporate deserters. That's why if a deal does go through with Burger King, it could add further urgency and speed up reform on Capitol Hill to do something about it. For Nightly Business Report, I'm Sarah Eisen.
Here's another big deal today to tell you about. Roche, the Swiss drug company, is paying nearly $8.5 billion in cash for U.S. biotech company Intermune. The acquisition will help the world's leading maker of cancer drugs expand into lucrative rare disease treatments. Intermune has a promising new drug to treat a lung condition. Intermune shares surged 35% today. Meg Terrell has more on what's driving this merger.
Healthcare companies have been on a buying spree. From Pfizer's attempted deal to buy AstraZeneca for almost $120 billion to AbbVie's successful purchase of Shire for $54 billion, mergers and acquisitions in the industry are at a record high. But the traditional targets, biotech companies, haven't been the main event this year, as companies pursue M&A for tax reasons.
There have been an increased number of these transactions that are tax inversions, inverting into a non-U.S. corporation to really lower overall tax rates.
That may be changing, JMP analyst Lisa Bacco says. Roche's purchase of Intermune yesterday signals Big Pharma's appetite for potential biotech blockbusters is still healthy.
This transaction of Intermune and Roche is more of the ilk of a traditional biotech, biopharma M&A agreement where it's really about the pipeline, the asset, the strategic fit between the two companies.
So for $8.3 billion, what does Roche get? Intermune makes a drug for a fatal lung disease called idiopathic pulmonary fibrosis. It's approved in Europe and Canada and is currently under review in the United States. And the disease it treats is a devastating one, Intermune CEO Dan Welch said today.
This is a terrible disease. It affects at least 100,000 patients, probably more. The patients die very quickly. They have very bad time breathing. And today there is not one drug approved at all. So it's as if a cancer patient would be told today, you have cancer and you have no therapy.
Analysts expect the drug called Esbriet will be approved by the end of this year in the United States and could bring in more than $1 billion in peak annual sales. The deal comes amid a run-up in biotech valuations that even Roche CEO Severin Schwan said had him puzzled.
I think valuations in general in the biotech industry are high, and I keep scratching my head. But joining forces with Intermune is really something special. It's a unique opportunity where I believe we can really generate value for all stakeholders, including shareholders.
The purchase kicked off speculation that other biotech names might be in play. Analysts cited names like BioMarin, Intercept, Vertex, and Puma Biotech. But biotech investing is always risky. While Roche is paying $74 a share for Intermune now, just a year ago, the stock was trading at $15. For Nightly Business Report, I'm Meg Terrell.
We got some fresh information today about the health of the U.S. economy. In housing, sales of newly constructed homes stalled. They fell by almost 2.5% last month, more than expected, and in contrast to sales of existing homes that are revved up. Analysts blame the drop on rising prices for new homes, now averaging more than $339,000, while prices on existing homes go for almost $100,000 less on average. A majority of economists believe the Federal Reserve is doing the right things to fix the U.S. economy. A new survey by the National Association of Business Economists shows 53% said the Fed stimulus programs are on the right track, but 39% thought the central bank is doing too much. But the vast majority agreed there is little risk of inflation during the coming years. And no signs of inflation at the pump. Gasoline prices continue to fall. The Lundberg survey says prices are down on average 4 cents in the past 2 weeks as oil prices keep declining. According to the survey, the average price of a gallon of regular was $3.48. Prices have been dropping for the past 9 weeks, the entire summer travel season. And of course, it's also barbecue season. And the U.S. Agriculture Department says the price of meat, this is both beef and pork, will continue to hit new highs. Look for a total increase of as much as 7.5% for the year because of the drought and disease. But food price hikes are still near long-term averages. Prices are expected to rise by 2.5% to 3.5% this year and could drop a bit in the year 2015. Still ahead on the program, the financial aftershocks many homeowners and small business owners may face following the worst earthquake to hit Northern California in 25 years. That's coming up. Northern California is cleaning up from the worst earthquake in more than 2 decades. In Napa County, a major hub of the California wine industry, which generates thousands of jobs and, by some estimates, contributes $13 billion a year for the local economy, business owners are just starting to assess the damage. Josh Lipton has more.
Business owners woke up this morning in Napa, California with some big decisions to make. Many had suffered a lot of damage because of this earthquake, especially if they were in the wine business. Of course, this area is well known for that industry. Napa is home to 800 wineries that produce 50 million cases of wine every year. One such winery is Silver Oak Cellars, which suffered a lot of damage, rack after rack of broken wine bottles. We talked to its CEO, David Duncan, about the impact of the earthquake on his business.
At Silver Oak, we make a blend, and we blend together different vineyard sources, so we make a beautiful, consistent wine every year. And so these were those individual components of our blend that we bottle a few bottles of just to save them so we can taste them over time. And so to lose those, they're completely priceless and one-of-a-kind wines that are now gone.
Another business owner is Bill Hill of Henry Hill & Company, a wine warehouse, who also suffered a lot of damage because of the earthquake. He said they were waiting around in a sea of wine.
I mean, right now we're trying to figure out what we have to do today to protect what's left. And then later, I will have a chance to think about what this means for us, and where we go from here.
The estimated economic losses of this earthquake could total anywhere between $500 million and $1 billion. It's according to a preliminary estimate from CoreLogic. Josh Lipton, Nightly Business Report, Napa, California.
As Josh just reported, early estimates put the damage from the Napa earthquake as high as $1 billion. If that's true, it could be one of the costliest earthquakes ever in the United States. But as Mary Thompson reports, millions of California homeowners don't have earthquake insurance, putting many of them on very shaky ground.
In less than a minute, the strongest earthquake to hit Northern California in 25 years caused hundreds of millions, possibly billions of dollars in damages, a cost many homeowners in Napa Valley will bear themselves.
It's startling that only 10% roughly statewide of Californians are protected against this risk.
The number is even lower in Napa. Only 6% of homeowners have coverage that averages about $800 a year.
It is an expensive coverage. It's a high deductible, so people are more reluctant to buy the coverage. However, it is very important that they do have it.
After the more than $24 billion in insured damages caused by the Northridge, California quake in 1994, many insurers dropped earthquake coverage for homeowners in the Golden State. So California created the Public-Private California Earthquake Authority, or CEA, to fill the gap. And while just under 900,000 homeowners buy the coverage, the CEA's Glenn Pomeroy says it can cover the damage in Napa.
Our financial strength is rock solid. We have over $10 billion in claims paying capacity at the ready.
It's also ready to write new policies for interested homeowners. Visits to its website spiked after the quake, as the CEA says they typically do after a trembler. Among the businesses in the damaged region, Constellation Brands, the owner of Robert Mondavi Wines, says it sustained minimal damage. Damage or not, the Insurance Information Institute says big firms like Constellation are typically better protected than small businesses, which could take a bigger financial hit.
Most likely, you'll find that the larger businesses, commercial businesses, have a risk manager in place, and they will most likely have the coverage, whereas smaller companies, startups particularly, may not have any kind of earthquake coverage or very minimal amount.
A lack of coverage that leaves small businesses and homeowners exposed to the financial aftershocks of a quake. For Nightly Business Report, I'm Mary Thompson.
AT&T and DirecTV might be one step closer to merging, and that's where we begin tonight's Market Focus. According to new reports, AT&T has come to terms with the federal government on conditions that pave the way for it to buy the satellite TV company. In May, AT&T agreed to buy DirecTV for more than $48 billion. AT&T stock rose slightly to $34.51 today. DirecTV was up 1% to $85.47. Shareholders of Ann Inc., this is the parent company of Ann Taylor, are putting pressure on the retailer to explore a sale. Activist investor Ingen Capital and hedge fund partner Red Alder delivered a letter to the board saying the company is deeply undervalued and is urging it to explore strategic alternatives to enhance shareholder value. The stock popped about 6.5% to $39.94. Amazon is buying Twitch. This is a site that lets video gamers live stream their games. It's a $970 million deal. The online retailer expects the acquisition to close before the end of the year. Now, this comes after reports that Google had almost sealed a deal to acquire Twitch for $1 billion. Amazon rose slightly to $334 and change. Meanwhile, Class A shares of Google fell a fraction to $590.57. BlackBerry scored another court victory against Typo Products, which markets a BlackBerry-like keyboard that fits on an iPhone. A U.S. court upheld a preliminary injunction that prohibited the sale of that product. Shares edged up slightly to $10 a share. And shares of Lifetime Fitness had a nice run-up in today's session. The fitness center operator says it's considering converting its land holdings into a real estate investment trust or REIT. Its board also adopted a shareholder rights plan to prohibit ownership of more than 9.8% of its shares. The stock jumped 16% to $48.36. And coming up on Nightly Business Report, an original Superman comic book sold for a record-breaking price on eBay and could mark the beginning of a new chapter for the online auctioneer. If you stayed in a hotel this summer, you might have noticed a bunch of new fees added to your simple room charge. It looks like they're learning a lesson from airlines that are now very profitable, thanks partly to a slew of extra fees. A new study predicts hotels will take in a record $2.25 billion this year, 6% more than in 2013. And nearly half of that revenue is expected to come from new and higher fees. As we reported earlier this month, a rare Superman comic book was put up for auction on eBay, and it was expected to go for a record price. The auction is now over, and the results didn't disappoint. But as Morgan Brennan tells us, the big winner might actually be eBay itself.
How much would you pay for a vintage copy of the first comic book to ever feature Superman? How about $3.2 million? That's how much one collector has agreed to spend on a mint 1938 issue of the rare Action Comics #1. At that lofty price, it's now the most expensive comic book ever sold, eclipsing the $2.1 million sale of another Action one in 2011. The sale is certainly a win for the book's seller, Darren Adams of Pristine Comics in Washington State. But it's also a win for eBay, which hosted a 10-day online auction for the comic. Sales like this one give the tech giant validity as a platform for higher-end collectibles.
What we've consistently heard from those buyers is that they're interested in really going up market a little bit with us and bringing more and more special, compelling, unique inventory that they just can't find anywhere else. Still at very much accessible, at also slightly higher price points. And so this is one indication of our move in that direction.
Comic books are part of that. eBay says it sold 4 million issues last year, a 14% increase over 2012. And now the company is expanding its footprint into other areas as well, like art, coins, and antiques, partnering with brick-and-mortar auction houses like Sotheby's. All of this amounted to an $8 billion business in 2013, and eBay expects that number to grow. But back to Superman. Comic book investors, even ones that weren't involved with this deal, say this will have exciting implications for the comic book space.
Over the last 10 years, you've seen an influx of very, very hardcore determined collectors and investors. And they're actually chasing very historic books in very high grade. And obviously, given that there's a limited quantity of that type of book, the price just goes up and up.
Metropolis Collectibles set the previous price record for a comic in 2011 when it sold actor Nicolas Cage's copy of Superman's debut. Sunday's sale means this issue, in good condition, has now appreciated 48% in just 3 years. A solid investment for the precious few lucky enough to afford one. Still, for all the millions now being spent on prized comics, the majority won't ever gain in value, or will do so at a much more minimal rate, leaving Superman to those with super bank accounts. For Nightly Business Report, I'm Morgan Brennan.
And that is Nightly Business Report for tonight. I'm Susie Garib. Have a great evening, everyone. See you here tomorrow. I'm Susie Garib with a Nightly Business Report news brief. Uncharted territory. That's where the S&P 500 index went today, crossing 2,000 for the first time ever in intraday trading, the latest milestone in the stock market's historic bull run. The Dow rose 75 points, the Nasdaq added almost 19, and the S&P up 9.5 points, closing at 1997.92. Corporate takeovers helped fuel the positive mood on Wall Street. Burger King is in talks to buy Tim Hortons. That's the Canadian coffee and donut chain. The combined company would be headquartered in Canada. And Roche, the Swiss drug company, is paying nearly $8.5 billion for U.S. biotech company Intermune. But some disappointing housing news. New home sales fell by almost 2.5% last month, much more than expected. Be sure to tune into Nightly Business Report right here on your public television station.